Welcome back to the Dividend Uncle, where we dive deep into strategies that make your investment journey both profitable and wise. Today, we're tackling an often overlooked aspect of investing, optimizing the returns on your liquid funds, or as we like to call it, your dry powder. In the investing world, dry powder refers to the cash reserves set aside for new opportunities. How much you keep as dry powder varies, but the goal all investors should have is to ensure these funds are working for you, earning interest, yet remain accessible for immediate use when those golden opportunities knock. Doing this well allows you to have even more dry powder when the time comes. Traditional versus innovative methods. Traditionally, keeping your dry powder in a savings account has been the go-to strategy for maintaining immediate liquidity with some interest benefits. But with interest rates in savings account often lower than desired, especially in Singapore, are we really maximizing our potential returns? Enter Mari Bank, a game changer for investors seeking to maximize the potential of their liquid assets. Mari Bank allows you to earn more than 4% on your dry powder, while retaining the ability to withdraw your money immediately. Before we dive deeper, I want to make it clear that this is not, and I repeat, not a sponsored video. My endorsement comes from my personal experience. I've been leveraging Mari Bank for precisely this purpose and have been thoroughly impressed with the results. And this compels me to share it with you, my valued friends and viewers. Let's dive right in. Dry powder you need immediately. For a start, Mari Bank's savings account boasts a promotional interest rate of 2.88%, a figure that's hard to beat in Singapore's banking landscape, other than the accounts where you must meet conditions such as depositing your salary or minimum spending. But Mari Bank doesn't stop there. They offer something even more intriguing for savvy investors: Mari Invest. Imagine a money market fund that combines the safety investors crave with the liquidity we all need. That's Mari Invest. It's extremely safe, managed by Lion Global Investors, a name synonymous with trust and performance in the financial industry. Here's where it gets interesting. Mari Bank has a special arrangement allowing investors to withdraw up to $10,000 instantly from Mari Invest, mirroring the immediacy of a savings account withdrawal. I am not sure how much you need to capitalize on an opportunity, but $10,000 in a day is usually enough for me. While I monitor the opportunity further, I can withdraw another $10,000 the next day. Dry powder you can liquidate by the next day. But should you need more than $10,000 for an investment opportunity, simply submit your sale order before 7:30 a.m. on a working day, and you'll have the funds the same day. Otherwise, you can still expect your money by the next working day. This is remarkably quick for accessing funds in a money market fund. Why is this important? Because it represents the ultimate solution to managing your dry powder effectively. You're not choosing between earning interest and staying liquid. With Mari Invest, you get both. And in the world of investing, having your money work for you at all times is the cornerstone of smart financial management. Wait, isn't money market funds riskier than savings account? As we delve into the innovative strategies Mari Bank employs to enhance our investment dry powder, addressing the topic of risk becomes crucial. Given that our dry powder is primarily aimed at readiness rather than risk-taking, maintaining liquidity is paramount, even as we seek to maximize returns. Therefore, it's essential to evaluate the acceptability of the risks associated with Mari Invest in this context. Let's talk about the safety net for your funds. Normal savings deposits in Mari Bank's savings account are guaranteed by the bank but are also insured by the Singapore Deposit Insurance Corporation up to $75,000 per customer. This offers a layer of security for your liquid funds, ensuring that your dry powder is protected. But what about Mari Invest? It's true that parking your funds in a money market fund, like Mari Invest, introduces a different risk profile compared to a traditional savings account. Money market funds, by nature, invest in short-term securities and are considered low risk, but they're not entirely risk-free. However, when we peel back the layers and examine the composition of Mari Invest, the picture becomes clearer and more reassuring. 1. Underlying assets are largely as safe as T-bills and cash. A significant portion of Mari Invest's assets, more than 75%, is invested in MOS bills, with another 15% in cash equivalents. MOS bills are short-term securities issued by the Monetary Authority of Singapore, which are very low-risk investments, similar to the T-bills that we are familiar with. In addition, the weighted duration of the assets is 0.12 years, which means the bills or bonds will expire every 1.5 months. This short duration ensures minimal interest rate risk and, to a certain extent, credit risk as well. The choice of Moss bills and cash equivalents as the primary investments and the extremely short duration for Mari Invest underscores a commitment to safety and reliability. This strategic allocation helps mitigate risk, making it a secure option for your liquid investment funds. Furthermore, the funds you invest in Mari Invest are held separately from Mari Bank's own assets in a custodian account with licensed banks or financial institutions in Singapore. In the unlikely event of Mari Bank facing financial difficulties or going into liquidation, your investments would be protected from creditors, ensuring that your assets remain safe. 3. Returns are not guaranteed, but we can withdraw if the rates become unsatisfactory. Now, let's address the concern about the certainty of returns. While the interest rates on savings accounts are guaranteed by the bank, returns from Mari Invest, like any investment, cannot be guaranteed. With interest rates expected to decline in 2024, the 4% yield may decline. However, Mari Bank offers transparency in the returns currently earned by Mari Invest. The annualized returns over the past 4 weeks are showed prominently in the app and always updated. This allows us as investors to make informed decisions based on real-time data. Should the returns from Mari Invest begin to dip below expectations, the flexibility to withdraw your funds swiftly and without penalty provides flexibility to respond to changes in the financial landscape with agility. To sum up, while Mari Invest introduces a different risk profile compared to traditional savings accounts, the risks are thoughtfully mitigated through strategic investment choices, protective measures, and operational transparency. The Dividend Uncle's real experience. I speak from personal experience when I say Mari Bank has transformed how I manage my liquid funds. By sweeping extra cash into my Mari savings account, I've seen my dry powder not just sit there but grow, ready and waiting for the right investment opportunity. In typical The Dividend Uncle style, I sweep every single dollar I have to Mari savings or Mari Invest before I go to bed at the end of each day to earn that extra interest. Winky face. Remember, our mission here at the Dividend Uncle is to share real, actionable insights based on my portfolio and experiences. Mari Bank's offerings align perfectly with our philosophy of making every dollar work as hard as possible, without sacrificing the flexibility needed to seize opportunities as they arise. So, whether you're a seasoned investor or just starting out, consider how you're managing your dry powder. In a landscape where every percentage point of interest can compound into significant returns over time, optimizing your liquid funds with solutions like Mari Bank savings and investment options could be the edge you need. Thank you for joining me today. If you're looking for more tips and strategies on making the most of your investment journey, don't forget to like, share, and subscribe. Until next time, keep your investments smart and your returns maximized. This is the Dividend Uncle, signing off.